On December 1st, the Indian markets did something pretty wild. They shot up to a brand new all-time high, and then, poof, all the gains just vanished by the closing bell. So what on earth happened? Let's get into it.
One minute you're celebrating a new record, the next minute the market slams on the brakes and closes almost exactly where it started. So what's the real story here? Is this a warning sign, or is there something much bigger going on beneath the surface?
Okay, so first things first, we got to zoom out a little. The Indian market never operates in a vacuum, right? The global mood always sets the stage. And today, that stage was definitely set for caution.
And yeah, the mood was weak. Even with all this rising hope for a rate cut from the U.S. Federal Reserve, we saw a pretty soft start everywhere. S&P futures in the U.S. were down. Over in Asia, Japan's Nikkei took a pretty big hit, down almost 2%. Europe was just, flat. All of this basically gave our market a yellow light right from the get-go.
All right, let's bring it back home to India, because our market story today was a classic tale of two halves. We had this brilliant, promising start that just completely fizzled out by the end of the day. Just look at this contrast. The morning was pure adrenaline, total optimism. The market just soared to new record highs. But the afternoon? A complete U-turn. It felt like everyone decided to cash in their chips at the same time, and that profit booking erased every single gain we'd made.
And what that left us with was a flat, slightly negative close. The Nifty ended down just 27 points, barely a blip. The Sensex closed down about 65 points. Honestly, after hitting those incredible highs, a close like this just feels, it feels like a big pause button was hit. A real moment of indecision.
But those headline numbers, the Nifty and Sensex, they don't tell the whole story, not even close. Because underneath that flat surface, there was this massive tug of war going on between different sectors. You had metals and PSU banks showing real strength, gaining 1% to 2%. But on the flip side, realty and pharma stocks were getting hammered, falling by about the same amount. A totally split market.
So while the stock market was trying to figure itself out, the real action, the big story of the day, was actually hiding in plain sight over in the commodities market.
Silver, it was on an absolute tear, surging over 2% to almost 1.8 lakh rupees per kilogram. And what's fueling this? Well, strong industrial demand, for one, but also those very same hopes of a Fed rate cut that left the stock market feeling so hesitant.
Now, to put that single day's move into perspective, get this. So far this year, silver has delivered an incredible 91% return. It's been one of the absolute best performing assets of the entire year, and today was just another chapter in that really powerful story.
So, after a day like today, the big question is, where do we go from here? Well, to get a clue, we need to do what we always do. Follow the money. And that means we need to see what the big players, the institutional investors, are up to.
If we look at the most recent data from November 28th, we see that familiar tug of war. The big global funds, the foreign institutional investors, or FIIs, they sold off almost 3,800 crores. But our homegrown heroes, the domestic institutional investors, or DIIs, they stepped right up and bought over 4,100 crores worth, basically soaking up all that selling pressure.
Now, that daily number is interesting, but it's just one day. The real story, the clue that could signal what's coming for the rest of the month, is found when we zoom out and look at the historical pattern. This is where it gets really interesting.
Look at this. It's an incredibly powerful trend. For the last 5 years in a row, without fail, FIIs have consistently turned into massive net buyers in the month of December. People link it to year-end adjustments, that festive Santa Claus rally feeling. We're talking huge inflows, from 8,000 crores all the way up to 25,000 crores. It is a clear repeating pattern.
So what does this all mean? It means that despite the selling we've seen from FIIs recently, history is screaming that we could be looking at a classic December bull run, where that whole trend just completely flips on its head.
Okay, so with that potential setup in mind, let's wrap this up by looking ahead. What are the key events in stocks that could either confirm this pattern or, throw a wrench in the works?
Two huge events are on everyone's radar. First, the RBI's monetary policy meeting right here at home. Second, a big speech from the U.S. Fed Chair, Jerome Powell. Both are going to give us critical clues about interest rates. And on the stock front, you got to keep an eye on today's winners like Ultratech Cement and Maruti. They showed some real strength against the tide.
And here's why all of this matters so much. Analysts are now eyeing a potential target of 27,000 on the Nifty. If these big central bank meetings signal that, yes, rate cuts are coming, that could be the exact fuel the market needs to break out of today's pause and really go for that next major milestone.
So that leaves us with the one critical question.
We've got this powerful historical pattern of December buying from FIIs, but it's clashing head-on with these huge, upcoming central bank announcements. So will the pattern hold and ignite a year-end rally? Well, you can bet we'll be watching very closely to find out.